All right, good morning, everyone. Great to have you along with us on this crazy journey of trading. Today is Wednesday, August 19th, 2026. And before we get started, the regulators require me to show you the disclaimers that you all understand the risks of trading. NFA Compliance Rule 2-29C subparagraph 1. You can go look that up if you want to read in greater detail. Bottom line is trade with money you can afford to depart with, and past performance not necessarily indicative of future results. All right, that's how we begin our session every day. Satisfy the regulators. All right, so we're still in the midst of, kind of a big vacation period, and whatnot, but that does not mean that there is not trading opportunities, or in fact, plenty of trading opportunities. The rhythms may slow down a bit, but the opportunities persist. So we'll keep that in mind, and we'll continue doing what we do and how we do things. All right, so today is the final day of the 3-day cycle. And in this particular cycle, uh, contrary to other previous cycles, the price now is below the cycle day one level. So here on the NQ on the left hand side, that red line is the CD1 low at 54s, and over here on the right, CD1 low is at 63.50s. Right, last night. So this was yesterday's activity. Again, I'll be referencing the ES primarily, but anybody that does trade the NQ, it's essentially the same um, analysis. Just change the price levels and such. But again, going over to the ES, which is our primary contract. Of course, we had that breakdown in yesterday's session. That was a continuation from the cycle day one. Now, typically on a cycle day two, that was yesterday, right? Again, generally on the cycle day two, we're looking for some balancing back and forth. But a lot of times it depends upon how the cycle day one goes out. All right. So that cycle day one closed on the lows. So the expectation coming into cycle day two is more of a spillover of the cycle day one momentum. And of course, that's what did occur. Now, during yesterday's session, we did have some balancing, clearly, right? But only after the market uh, broke lower. And so yesterday's RTH session, again, I'm showing Globex here. On the RTH session, it was clearly a consolidation day, and that is typical of a cycle day two. So you had a little bit of a combination of both. One, we had the spillover continuation momentum from cycle day one's weakness, and then and that happened during the Asia Euro session, and then during the RTH session, we actually had that cycle day two balancing. All right. Now, overnight here, heading into cycle day three, again, a little bit more of a spillover because the cycle day two also closed on their lows, its lows. And as such, we were looking for a continuation or another spillover. Okay. Right into our D level at 77.02. So for those of you that are all familiar with the D level, very key level for us. And then buyers stepped in, as you can see. And then here we got to put in a little bit of a bull flag heading into the pre-RTH session. And then we got this aggressive move up, more likely as a result of some commentaries from the Treasury. But you can figure that one out. Bottom line is we had 77.15 line in the sand today. And then we just simply had scales, 25s, right, 35s, 45s, all were naturally fulfilled. And again, I'm looking backwards into yesterday's session, right? Coming up with some, the basically our three primary targets, right? Now, the goal for today is what, everyone? Since it's a cycle day three and price is below the cycle day one low, the goal is to reclaim, right, the CD1 low. That's the goal. Whether or not that's fulfilled, we'll see. But historically, 92%, all right, of a positive, right, 3D cycle. All right, so that's pretty strong statistic. Again, that's a historical statistic spanning nearly 15 years now. So take it or leave it. Again, as we discussed yesterday in the PTG room, obviously the folks in Pitt did not have that um, ability to hear that. But in yesterday's PTG community, we were discussing how ways to trade the 3-day cycle. One of my favorite ways, and this is not advice. I cannot offer advice. I can just show you and tell you some of the various plays that I like doing. So you'll have to explore that on your own, right? And assume your own risk on that. But one of the plays I do like is on a cycle day two, yesterday, when price is less than, right? So price less than cycle day uh, one low, okay, on cycle day two, and cycle day two is a deep low or deep sell down, which it was yesterday, right? Deep sell down. All right, what I'm looking to do for a play, I'm looking to reclaim, right, the lost CD1 low. And again, that statistic of 92, right, is the idea. So what I'm looking to do uh, into cycle day two, and it's specifically if the market is weak like it was yesterday, right, play a call option. Of course, that's a buy, right? So a call, right, back up here. Um, and again, I cannot offer exactly what strikes or anything else. So that again, you'll have to do all that. But typically, if you're targeting the cycle day one low, right, you're going to do an equivalent strike near to around that area. That would be something to think about. And the idea is to get back up there. And so if you can get that call for, really a cheapo call, you know, sometime during the day yesterday or even into late afternoon, you would have had a good opportunity to buy, a call option, maybe, just a next day call option at a really cheapo price, right, for a move. So again, what we're doing is simply is we're playing the targets. We're playing the 92% to reclaim. So even this morning, for those that did that, probably have a good. If you bought it late in the day, particularly late in the day, you're already in the money on that going forward today. Um, but again, that's the play that I like, given the way the cycle structure is. All right, so that's that aspect of the morning briefing here. But simply, the market gave it up yesterday. Again, we're just looking for the coming in today now as we have positive momentum. Okay, the previous midpoint for yesterday was the 77.40s, right? And then the previous week's low was 38. So I'm looking for this zone here, okay, to offer support, right? And to try to build higher value again, all right, to try to reclaim that lost cycle day one low. So that's really kind of the goal. Again, this is certainly not a prediction, but we're trying to lay out some scenarios. That would be the bullish scenario. Should the market not hold 38.40 area, okay, and so you get the kind of the profile pretty much right here, Okay, so this was the hump of yesterday's activity. This was the overnight activity, and so this is that, call it, 30s, 40s area, 35s, 40s area, would be the transition zone. So we're transitioning from one lower value back to the upper value, or from the upper down into the lower, then trying to reclaim it back above. So that's the goal for today, is to, again, we, as always, going to stay, number one, we're always going to stay flexible to what the market is offering us for opportunity, right? Staying in alignment with what the market is doing, not what we'd like it to do. What we're suggesting is, and we're planning for, are various scenarios. So if the bullish scenario, which is the currently the one unfolding, is continues to be active, then we're going to just simply maintain our positioning right in alignment with that. As a backdrop, obviously we have VIX expiring today. The gamma exposure, lean. Okay, and again, I wrote about that this morning, right, from a post, very very good post and outline of the gamma exposure. Right. Again, I'm not smart enough myself to know all that, but I'm smart enough to have the tools to be able to read it. Right. And so I offered that up there early this morning post. So if you didn't read that, go ahead and read that. Right. It's a bit above in the postings. All right. So with a positive gamma also backdrop, that can support the further upside, upside momentum, and that's what we're going to be looking for. Now, ES naturally is much stronger here to reclaim its lost cycle day one low versus the NQ. The NQ has, quite a distance, right, currently to go. For you NQ drivers, NQ players, right, the 700 was a target, so that we're going to check that box off this morning. That got fulfilled up here, right, on this push higher. What needs to happen for that now, right? Same thing with the ES, right? We still need to see a continuation. Got to try to build above yesterday's upper edge of its uh, volume profile, and that would be, again, getting 700, 800, or 750, 800, right, and trying to build that higher. So if you're an NQ driver, essentially that's what you're looking to do. All right. Yeah, the Russell already did. Okay. Yeah, I haven't looked at Russell for ages, but right, and that's kind of the outline, everyone. Yeah, I'm not an economist. I don't try to make heads or tails of various Treasury announcements or Fed announcements or whatever and all that. I'm not smart enough for that. I am smart enough to follow price action, and I stay in my lane. I know what I can do, right, and we continue to you know, s- stay along with that. All right. If you have any questions, comments, obviously, let me know. We'll get going here. We already had some good opportunities this morning. Let's see if, is actually one thing. I don't know if anybody ever noticed, but some of the best opportunities, truthfully, rhythmic wise, rhythms of the market are between the Euro session and the RTA session. So I'm gonna kind of label it like 5 a.m. Eastern time, right, to about 9 a.m. Eastern time. The rhythms are very smooth, very directional in most cases. Then you get why, because there's not as many predatory algorithms as you have during the RTH session, right? So it's a lot smoother, a little just cleaner the way the market trades or reacts. But anyways, we'll have some opportunities for us today. Let's stay focused. All right, market's going to open in a moment. Dingity ding ding. Again, looking for that 3840 area, or 35s, or 30s to 40s. Trying to give it a little bit of a room to operate. Am I using a 300 tick chart pre-opening? I don't think so. I don't think so. I don't think I made any changes. All right. Or else I'll get to your question. Yes, a bit later. All right. Our A4 here in the middle lower window. All right. Again, it is has a short, and we got two take profits already on that. Again, our algorithm runs autonomously. All right. Again, I've coded in the exact nature of what I'd like to do if I was doing it manually. And sometimes the algorithm will take care of that without me even knowing it half the time. So even though we're using some automation, we got to manage it. We got to monitor it. Right. So that pulled off an automatic short. And then so how we do things here is somewhat of a combination of excuse me, automation as well as manual discretionary trading. For those of you that are in the pit that are unfamiliar with what we do and how we do things, uh, the commentaries and the plan and so forth that we lay out for everybody is generic for everyone. And the goal is to keep everybody aligned with the current action, not trying to predict where the market is going to go, etc., but planning things out accordingly and then seeing when the market, as it's unfolding, is it adhering to various scenarios? And then, of course, bottom line there is we want to be aligned with those various scenarios. All right, here we coming down to these 38 area. Let's see if this works out at all. Again, what I'm looking for the market to do, and it can do whatever it wants, but I'm just thinking if we get a pullback here, I'm looking for these like 35, 40 zone to elicit, right? Elicit a buy response. And if it doesn't, it doesn't, right? But that's just again a scenario. In the meantime, we are short of this A4 auto, and we have. Let me just stop the bouncing here. Everybody sees that in the middle, right? In the pit. So we got three take profits. Now we got a runner. Okay, so on this runner, and I always say to everybody here in our community is once we've gotten all three take profit targets, right? The runner should never you should never lose on the runner. Should never give anything back on the runner. So how do we do that? Well, simple, right? We bring our stop on the final runner to break even. So I'll accept the break even For the runner, I will not accept the loss for the runner. That would be poor management. Right. So the core basically is three contracts, and then that final contract certainly is part of the risk profile. But that final contract, if we get a runner, that's what we are using that fourth contract for, is a runner. I can't offer advice, but at the same time, I try to explain what we do and how we do things and the rationale for what we do. All right. So what do we got? We're right down to the 35s, right? That's what I highlighted here in the zone. So you can see how I put that zone up there. So that's kind of where I'm looking for the market to respond. 35 quarter on the low. So Mr. Market needs to respond from us. So again, we're still short of A4, and we just triggered an A10 long. Let's see if A10 will respond for us. So we got both covered here. And we do have a 5-minute opening range here is 38 through 46. So for those of you trading opening range, and again, it is an inside opening range, inside gap. Right. So you want to monitor the midpoint of that, which is 42s, which is essentially our reference point there, right, within the zone. So the idea would be if you play an opening range, you'd want to see this reclaim, right, the mid, hold above it, and then look for a shift and a push higher. So for those playing opening range on the bullish side, on the bearish side, though, of course, is we have two sides, right? So we're currently below the open range a little bit. Right? If you get a bounce up to the midpoint and it fails, then you're going to be looking for a move back lower to play the short side. So market always offers you two sides to play. Currently, the immediate lean, all right, so the early lean was up. The immediate lean does favor, obviously, a pullback here, and that's what we're getting. Nope. Boy. All right. So remember, guys, levels are levels, zones. Again, we're only putting out potential scenarios such that, so if I'm anticipating or I'm looking for a pullback to a particular area, right? 30s, 45s, 30s, 40s, all right, 30, as I've mentioned, that is all that is, right? Do not interpret that directly as soon as it gets there, oh, that's the price and I'm going to buy it. That is not the case, right? So all it is an outline, is a scenario outline for the potential for the market to do something in an area. If the market does not do that, then we are not taking a trade there. Very simple. Right? And our primary goal is very simple, right? Stay with the dominant direction, dominant force. And when that shifts, we just shift with it. But we will identify areas and zones and levels that are anticipated to offer some sort of a response. But I'm looking to stay in alignment with the dominant force at all times. All right, so you got the 35 or so 40 zone they're currently holding. All right, looking to take potential long here now. If we can get this hold, again, this is the key zone. So we did get stopped out on that 810 crapola because the 810 did shift. That was unfortunate. Right at the right time. All right, so again, looking to take a long here in this zone, get a little bit of a pullback. Again, the key is to get past this opening range midpoint. Let's see. Yeah, we're still on the short side of the A4, but we're getting close to getting stopped out on that. I'm not interested in taking that as a 200 extreme short. Not at the moment, anyways. But it is a 200 extreme. All right, so it did get stopped out here on the balance, okay, on the trailer on the 84, so that worked out very nicely. All right. So we get this move down into this first expected zone, all right, that I've outlined. We get the initial push up off of it, still in the opening range area, high volume node area. I'm looking for if we get some sort of a retest here to hold, then that may offer us a much more solid opportunity for an entry. We'll see. We don't really have a full shift yet. We have a staged order here on the A4. So again, the key is I'm referencing that opening range zone, right, and looking for a shift. All right, not getting that. So again, just trying to be patient with this. Yeah, Rom, even though that was a 200 extreme, it still wasn't in the proper configuration. All right, so we don't have a long trade here. We were looking for one potentially. We were looking for that shift to hold, and it just had to be a bit more patient with that to establish a long. And again, just waiting for the market to prove itself, and it didn't. So no trigger, right? No trigger, no trade. Smoking Joe stumbles again. Yeah. Really? So everybody understands kind of the walkthrough on that of what I was looking for, and just waiting for the proper opportunity to have the market show us. Right. So again, just go, there's a quick walkthrough. Right. We got our initial pullback to the zone that we were looking for the hold. in here. Did get an initial bounce off of that. Okay, so and again, an aggressive long would have been taking it directly from the zone. Again, I have a tendency myself to wait for a move off that and then pull back and hold. We did have an A4 shift, but we didn't really have a full EMA shift here, right? You see how it just kind of flattened out. I really want to see some separation in that EMA structure. There was really no separation. So even though you get the bounce, all right, and again, we had our opening range zone that we were focusing on in terms of getting back above. All right, so on this push down, move up, we were looking for a hold and then a move back up and a hold, all right, giving us a better potential upside. That's what I was looking for, describing. All right, waiting for that pullback and then the move back higher. Did not happen. All right. Okay, so that didn't happen. That's what I was looking for, right? Obviously, the short, obviously a short play played out, but essentially, it's hard to be looking for longs and shorts at the same time. All right, everybody it can really do that effectively, right? So you got to be kind of thinking one side or the other. Um, yeah. Market's still giving us the information about what it wants to do, what it's trying to do, probing around, find out where there's responses from. And again, we'll take that, let it do its thing. ATA did take a short here off the auto. Not sure that's going to hold. We're going to flip out pretty quickly here. Yeah. So what's happening is we got a couple flips pretty quickly on the ATA. All right. When you get these fast clips on the ATA, again, the market is just kind of whipping around a little bit between those levels. All right. So got to wait for it to stabilize a little bit better to get a good auto trade sequence. The ATA still is designed to take a quick stop out as conditions warrant. Again, very strict rule based. Minimize your losses, right? And then try to maximize those gains, particularly if we get a runner, period where we get a runner. You got to be willing to accept small stop outs. Let's go to the 5 minute chart over here. So here's another thing you can do, right? Again, we have a relatively narrow open range today. Okay, 38s, 46s, right? Very narrow open range, obviously, 'cause but what happens is when we get that narrow opening range, again, that's still a reference, right, to move higher. We talked about that. But when we get this deep pullback, remember, we got to look, remember, always look backwards. Always look to the previous day. What were some of the key areas, zones, levels? This is where you're going to actually, again, accelerate your understanding of price action, right? Again, mark off those areas. So in this case, the 5-minute chart I have over here on the left, we have the blue zone there is the 5-minute opening range from yesterday. What else can we identify, right? Remember, pivot highs and pivot lows. So there's a pivot high there around the 22s or so. Carry that forward, right? Carry forward. Where was the breakout, by the way, this morning? Where did price come back down to? Scene of the crime. Again, I know this is after fact at this stage. What I'm trying to impress upon you is you need to be looking at these levels again in advance, right? Planning those levels out. Like this morning, coming in like, oh, hey, what happened? Oh, the market broke out higher. Okay, great, broke higher. Hit some upside targets. Okay. Now the question is, well, what happens if the market retraces? Right. So now you're into that, what if planning stage, right? What if the market retraces? Well, okay. So what if? What does that mean? What if? The point is you want to be looking for, well, if it does retrace, what levels, zones, areas can we identify that may elicit a response? That makes sense to everybody in both rooms? Okay, so again, if you're not doing that type of work, you could potentially miss a very good opportunity at a level. Prices love to go back to specific levels. I don't necessarily know the rationale as to why, but it does. And I don't care to know the whys. I just know that markets tend to go back to levels and I guess test them, right? So, all right, Philly got it. All right, good. All right. So again, just over here, you just mark them off, right? So you know what I mean. The thing about it is those are clearly identifiable. And so there's no guessing. It's just a matter of just, hey, look at the charts. Where did price break out from approximately? And then the thought process then is this. If price broke out, say, call it 22s, 24s, right? If price broke out from that early this morning, right, which obviously it did, if there's an opportunity for price to pull back to that area, question becomes, what do you think is more likely to happen after the markets broke significantly higher and has pulled back significantly back down? What is the more likely scenario? Probably going to get a buy response in this case. So that becomes, you're looking for a buy response, right? We label that BR, right? Looking for a buy response from that level. Well, where did it come from this morning around the opening range? So we would target back up to the open range. All right. So these are just kind of things again, you need to be carrying forward what has happened in the most recent past because the market tends to respond from, levels to levels, right? Yeah. I think what happens to many, and again, including myself, that's why I talk aloud on a lot of these things, right? The idea is being able to have a work chart. So this is kind of what I like to do. I like to have a chart that I just specifically am using as a work chart. Typically, it's going to be a 5 minute. Sometimes I'll go over to a 60-minute, but most times it's going to be a 5 minute. And in terms of the work chart kind of environment, is that's the chart that I can identify all the various key levels and maybe make a note to myself about what happened, or even just for that matter, like, you know, you can use like some of the tools you hear, like the ellipse. I like the ellipse, right? So use the ellipse, right? So use the ellipse, kind of a circle, right? And then just highlight it. I don't even have to put any text. If you want to put text, great, if that helps. The idea then is just to highlight. It says, well, something happened there. So now when I look at the chart, what stands out as I'm looking at that work chart? That area. So now in my mind, I'm looking at, hey, 20s plus or minus 5. If we get back there, now I'm thinking to myself, we get back there, maybe I want to do something. Maybe I'll just lob an order in there. I don't like to leave too many standing orders out on the book because crazy things can happen. But if it gets close to that, now in my mind, I'm saying if it ever gets back there, there's a good opportunity for me to potentially take a trade long, right? So I'm kind of planning that. So just having that kind of work chart. So as you can see, right, snapback bounce to where? Opening range midpoint. So what does that tell us? Tells us the opening range area is an important area for the bulls to get through, right? For the RTH session. So that opening range obviously is the beginning of our RTH session. So that is the key for the bulls. What happened prior to that, right, on that spike up, okay, but really what's happening here is bulls need to clear through that opening range. So that's the primary consideration for the bulls for an expansion higher. Obviously, bears are going to try to work to repel that. So that becomes the primary area for us so far. Yeah, look. All right, so now just kind of doing, just kind of chugging in this opening range area. So just going to be patient now for either a move. So again, kind of the binary choice here, right? For the same kind of scenario, right? Again, still looking for this. I guess I'm just gonna, try to. I'm leaning on that potential before we get up and reclaim that reclaim that cycle day one low. But again, I don't want to get too one sided. But again, a break back down below these 30s, right, and a sustained, right, sell again. We'll rotate lower. We can see if the bulls can repel and absorb the sellers here. But what they'll need to do then is just get above that midpoint, that opening range midpoint. All right, so that's really kind of the outline for the immediate outline. All right. All right. So we got a couple things going here at the moment via the Auto X. We got a short of 810 up above. We just hit first scale. Uh, the discount on the right hand side, which I didn't think was going to pan out, just got stopped out. Okay, so that's no big deal there. And then again, we got an A4, which is again similar long on that strategy. That's probably going to get stopped out here. So, yep, there it is. But the 810 is carrying the load for us at the moment. All right. And again, here's the thing, this is all being done automatically. This is all being done automatically, okay? And so I'm just going to let that ATA run its course. I don't interfere with it. And again, it manages the risk, as I want it to. But in terms of a discretionary entry, and again, I think that's where many people are trading, right? Most of you are trading just primarily discretionary decision making and so forth, right? Versus an automated system, particularly in the pit room, you guys, and as many others as well. All right. So when I have a situation where the market is just kind of grinding things out in a very narrow range, I'm not looking to take a trade in that range. Right. So what I'm saying is just X the ATA there for a moment. Right. You see this range very tight. Okay. I don't have any edge. The edge that we have is once structure is built, a baseline structure or an upper structure, once it's built and it's in place, the edge then becomes when the market begins to move away from that area, right? So we're trying to get in the case of a breakout, trying to get that move up. And what we're really trying to do is trying to get those EMAs to separate, diverge. Okay. We want them to separate. That's going to tell us that there's building momentum in a particular direction. And yes, you're not going to get the very lowest entry or the highest entry. That's not the point. What you're trying to get is you're getting not only do you have structure then in place, but now price is moving away from that, right? It wants to move away. Did its job building structure. Now we're going to move away from that. We're going to build some momentum. When you're in an area where it's consolidating, there is no momentum. So the EMAs compress. That should be apparent if it's not already. So we're looking for what's the resolution of a balance area? Are we resolving it higher, resolving it lower? I'm looking for those clues. Okay. And again, to be inside a balance area, remember that's where the heaviest amount of activity tends to be institutional wise. They're doing their business that they need to do, the big institutional players, because they need the liquidity, right? So they're getting that liquidity. We want movement. I don't need the liquidity. I want movement. So we need to align when the market is pressing in a particular direction. Okay. All right. We got our three scales on the A10. It's almost like anticlimactic over there. All right. So again, I don't think everybody here is um, ambidextrous, right? Left hand, right hand. You're either a lefty or a righty, which means I translate that into you're either a better or more comfortable long trader or you're more comfortable short trader. Most folks are not necessarily, you know, good at both. So you're typically going to lean to one side of trade activity naturally, right? That aligns with your own, internal. And so if you're a better long trader, then you're just going to wait. You see what's happening. You want to learn what's happening. Maybe you want to improve your ability to read both sides of the market, and you do that. But if you're a better long trader, you're going to wait for the long scenarios. Simple as that. There's nothing here that tells you that you must be a fantastic long trader and a fantastic short trader. Nothing. Play to your strengths, right? Improve your I don't like to call them weaknesses, but improve the areas you want to improve. But play strongly to your strengths. And in this particular area, it's just a kind of a two-way street. We're bouncing back and forth. All right. And we want to learn from that. So what are we learning? We're observing 25s are holding again. What's the 25s? Remember, we were able to identify that from yesterday activity, right? Yesterday's opening range midpoint, right? We see that. So again, we can still use references from yesterday. We should be using references from yesterday in today's activity. All right, price pushed back down to 25s, right? We're getting a response. So if somebody is looking at that from yesterday in the group and saying, well, if it holds, I want to go long or move back up again. Again, that's kind of an active trade plan for you, right? So I'm not saying you should be doing that. I'm just trying to help you think about the goal for me now. Particularly those in the pit area with our community in PTG. All right. My goal now for everybody going forward is to help them be able to think in a particular way that they just don't have adequately developed a skill set to do. Right, learning how to outline. I mean, having a core plan is one thing. At the beginning of the day, or from last night, that's all great. But as the day is unfolding in real time, right, the various plans that we're putting together, these scenarios, are active scenarios, and that's what's going to lead us to taking various trades. I'm not trying to guess that, oh, if we get a pullback, that's going to hold. But if a level holds, what does that tell us? What is that suggesting to us? Then is there a trade, to be had from playing a level? And if so, how would I trade that? What am I looking for? These are the things you must have defined. And so what I'm trying to do here, and it's very difficult for me to trade and talk at the same time, be honest with you. Right? That's why I kind of use the automation a lot. But being able to outline things as they're unfolding, I think it helps everyone. It certainly helps myself, but helps everyone. And again, it can kind of say, well, I'm not really looking to do anything until X happens. All right, that 810 over here, by the way, three take profits. Stop came to break even. Remember, as I said, that fourth contract is really can be a very big help as a runner. I'm willing to give that back up as a break even though it was in profit, unrealized profit. But I'm really looking at to take that as a break even. I'm accepting of that, and so that's what happened on that particular trade there on the 810. Philly D says, "Thanks, David. The narrative behind the plan is very helpful." Well, thank you. That's what I'm looking to do. We set up a plan, and again, as it unfolds, just trying to describe. All I'm really doing is just really describing what I'm seeing. And then based upon what I'm seeing, what would be the next area to potentially be an actionable zone? So for instance here, right, we got our move down to the 25s, right? Again, that was the prior midpoint, right? Opening range midpoint. We talked about that, right? Buyers responded. Okay, so I didn't take anything there. I didn't do anything there. So we got the move back up. What's our key reference here? We still have it, right? The opening range midpoint. All right. So now, what's our sandbox, right? So we talk about what we refer to as a sandbox. What's our sandbox? Well, sandbox is right, just what it implies. It's the playground, right? So our sandbox is what? This low here, right? And then we'll call it the midpoint up there at the 42s. So 25s, 42s. So that's basically the sandbox. Anything to the left of this now that's already occurred is really irrelevant at the moment. It may come into play as a reference later on, but at the moment, it doesn't really matter any longer. Because really, what only matters now is the price dropped down to the 25s and it pushed up to about the 40s. And that's really where we are. So nothing else really matters beyond those parameters. So that is how I refer to as our sandbox. Okay. And actually, we can get rid of this zone because we don't need the zone anymore, what we had outlined, right? So that really is all about. So that's why, again, I'm only looking at a small segment of chart. I don't need to look at I do see the bigger picture on the left, and again, that's my work chart. So I know, and I see how the profile is developing, right? See how the profile is developing, somewhat into a P-shaped type profile. So if we were to get a move higher later on, right, maybe we can, get it back up to those 63s, right, and create kind of that delta shaped balanced profile. All right. So we'll see how that kind of unfolds for us. Yeah, your pivot point. Yeah, so that's kind of yeah. So actively, right, Philly D. So I have the same as a pivot. So again, that's the volume weight. For me, that's the volume weighted average price, right? The VWAP. So that the VWAP can always be a pivot reference, right? Yeah. So you could say what I would do there is I would say, 25s, 30s, right, as a zone. I always like doing zones. I never like doing one solid number. So also if I mention a number, it's implied plus or minus 5 points, at least in our world. Okay. It's implied plus or minus five. So if I say 25, it could be 30 or 20. Right? That's kind of how I look at it. It's like for even like opening range, right? So I'm talking midpoint 42s, but it's really, I'm just going to round it out 40, 45s. I don't like to do 42, 47. You're not going to remember that as readily. If you do 40, 45s, 40, 35s, those type of things, kind of keep round numbers, 5 point increments like that. They tend to be, your mind tends to retain them better. And besides, the market is not that, you know, accurate like that. A lot of sitting and waiting when it comes to trading, to be honest with you. It's like it's Pareto's 80-20 rule. 80% of trading is watching, 20% is trading, and it's the 20% that will grab your 80% of your profitability, your P&L. So there's a lot of what we call observation and orientation, quite a bit of that. And that's the greatest amount, is just sitting and watching. Once you're in a trade, well, let me just step back. Once you're out of a trade or you're not and you're just observing, You have the greatest field of vision, don't you? You see everything, right? You see the whole picture, 30,000-foot view of the market and activity. As soon as you take a trade, your world collapses to that tick by tick almost, right? You get tunnel vision. And so, and that's what happens. I would say, I would say majority of traders. There are, obviously many exceptions, but majority. And so that's why you need to know what you are going to do or know what to look for in advance, having already researched all of that and done back testing and all that stuff that's associated with it. And then now you're just sitting and waiting and waiting for that opportunity. It's like, one of the analogies is like just being like a sniper. Sniper will sit in the weeds undetected for hours on end, days on end, if necessary, for that one shot, one clean opportunity. So, in a way, we're somewhat like snipers. Good traders are very much like snipers, have that type of patience. We were talking about patience the other day, right, in our room. So, yeah, patience is really key. And it may seem as though you're not doing anything, but you, in fact, are doing quite a bit. Being patient, waiting for that opportunity. So Philly D asks, when you're looking to execute, which time frame or chart do you go to chart? It's the shorter term. It's really the 750 tick over here on the far right. So I've always used the 750 tick chart for, I don't know, it seems now forever. It's sensitive enough where it generates some very good signals for us, uh, and that's what we want. We want it to, like if you're looking at a 5 minute chart, all right? Well, I see a 5 minute time period chart, but I see inside those time, because it's not time related. I see what's happening within, that time period, and we just tend to get and with a tick chart. Um, I think the accuracy of the data coming through is, as far as I'm concerned, is about as best as you can get, tick by tick. Now that's 750 ticks per bar, and I just found that provides very good rhythm. So I use the other charts for, I'll use a larger degree chart. I mean, you can go up twice that to 1500, and another one I like to use is a 4500 tick chart for more broader patterns. But when it comes to execution, I'm going to drill down, into the 750. So that's how I use it. But I clearly look at the 5 minute, 60 minute, sometimes the 4 hour. And like everything, we want to be aligned with the higher time frame. So one of the things that I do use here, I have this chart tab that I use is it's a MTF, right? Multi time frame. So let me just show you here on the multi time frame. So here on the multi time frame, this is your 4 hour chart. So I have a daily, right? So everybody has a daily. So there's your daily. I'll drill it down into a 4 hour, 240 minutes. Right. So now I kind of just get a broader look, lay of the land, right? And it's interesting here, so like on the 4 hour, what can I identify? Well, I have EMAs. I use a lot of these EMAs, 13, 34, 50 even now on that one. Um, so look where the bounce this morning went and stopped at. All right, stopped at one of the declining EMAs right up there. So that's interesting. So again, that could be act as a reference, right? So if the market pushed up there, where would it kind of intersect near an EMA, right? Around the 55s or so, 60s. So again, you have that as a kind of the planning chart, right? The bigger picture chart. Then you can drill down to the 60-minute, right? Which is what I do. And there it is. I'll have, in this case, I got some anchored VWAPs. All right, so there's a couple anchored VWAPs there. Again, I use different tools that will provide me, uh, some level of clarity, even before I get down to the nitty gritty. And then, of course, our 5-minute over here. I'll put it on. Let me just put it on this side. All right. So on the 5-minute, again, I have my series of EMAs that I use. 89. I got a 55, 34, 13. So right. And now look at, even on a 5-minute, the pullbacks into these EMAs. What do I expect to happen into these EMAs? I expect the buys. Market's going to respond. Those are the average prices over time, all right, over a series of bars. So that's a bullish configuration. I don't expect the market to slam down through those in reverse. I expect them to push down into them and get absorbed. So again, having the right tools, these are the tools I like to use, right? In terms of just, very simple. It's not rocket science, guys, And we talked about, coming back to a previous level, right? In the scene of the crime. Well, that's all part of it. And then so we got our 5-minute over here. And then now on the far right, this is our execution chart. This is our 750. But what's great about using Sierra chart versus some of these other platforms is, look what I can do. I can pull over these EMAs, right? I can pull them over to the 750 tick chart, right? So these EMAs, 89, 55, 34, well, those are off of 5 minutes. So what does that mean for me? Well, I can take a look at the 5-minute, itself, but now I don't need to. All I need to do is look at my execution chart. Now look at the information that it gives me. I have my EMAs on for the what we call our fair value zone on the 750 in and of itself, but now I have these 5-minute EMAs that are overlaid. So price comes down into this area. I'm an 89 EMA guy, all right? So that's an 89 EMA off of a 5-minute chart. Look where it stops. Is it an anomaly just today it stopped there? Well, I would say go back and check on that historically. You'll see that there's a lot of times where that 89 is going to respond. So the idea here is what? This deep move, you'd be thinking, oh, I want to short this. Do you really want to short that? I want to short that. They're selling it. What happens is, if you don't have the information of a higher time period, well, you'd be shorting into essentially support, wouldn't you? Right? That could be pretty darn dangerous to your livelihood, right? So this way, if you have a larger time frame information, right, that again, one of the keys of good trading is avoiding the wrong type of trade. The wrong type of trade. And that would be the case here if you were to short into this one either, right? So these actually become opportunities to buy, right? And so now, so what you want to do on the shorter time period as well is this could be a buy area. This could be a buy area, even though, it appears to be, they're selling it. Well, I'm not necessarily going to buy it on the way down. We're going to wait for it to respond and then start working its way back higher. That's when I want to buy it. That makes sense to everybody? I know it does, but to most everybody in PTG. How about Philly D and those guys in the pit room, right? Set up your chart where you have a higher time frame where you can identify that. And then in this case, now the market is starting to push higher. So all this was all absorption. 89, 55, 34, all in the 5 minute, all gotten absorbed. So what do you got? Higher lows, higher lows. And now look what's happening. Market's starting to push higher. All right. You have to set it up where you're seeing the larger picture as well. And you want to be in alignment with that larger picture. Is everybody else getting an echo? Check your screens if you don't have your audio. Okay, Ram, make sure you only have one iteration of the audio. Now it appears a lot clearer, doesn't it? When you start, putting in the type of information that is very useful. You need to have the right charts with the right information on your charts. So it'll help you make the proper decision. All right, we are long side trades right now on this shift. Let's go back to this chart. I don't have everything on. I don't have all the information on every single chart because the chart can get very busy. So from time to time, what I'll do is I'll go over to this multi-time frame chart and I'll say, okay, where are the EMAs? All right, or I may have those EMAs, on my chart already. So I don't necessarily have them overlaid. I have them overlaid here on this particular workspace, but sometimes I don't have them overlaid. But I see them and I understand what they mean. So like on this particular workspace here, I don't have those showing on here because again, it can get pretty darn messy. But I understand what the structure is and where like what I want to do, and that's what I'm talking about in terms of using um, a work chart. All right, so we want to yeah. So we're actually long here from 37s. All right, so we got the long. So again, now notice what's happening. So here's the thing on the long, right? So we got this long off 37s. We got 3 take profits. Right now, my stop is going to come up to even. Okay, so again, my fourth contract going to be break even now, so I cannot lose on that. Now that contract is a runner. All right, so you can see here we got a nice move running here, and this is what we were looking for. And now we have a runner. We have a runner. All right, and now we just sit with the runner. That's what we're looking for. That pays. That runner will pay for multiple those little raspberry stop outs. All right. All right. So what again? What was the anticipation then? All right, with this is to kind of get back up and retest. Um, I don't know. I didn't write it down. Damn. All right. Oh, the opposite side. Okay, got it. All right. So just that's all we got going here now, everyone. We get if you in the opening range, you guys. What did we have in opening range? Let me pull the opening range chart. For opening range, we're long of crude oil. We were short of ES. One target got tagged, and then stop trail is out. And then on the NQ, both take profits got hit. All right, so those are out. So those are good trades. Good opening range overall, and we're still working a crude oil open range. So that's for the opening range area for you guys. All right, I'll be back. I'm just gonna take a short break here, get some refreshments, and I'll be right back. All right, back with you. We're still holding on to this long A4. And again, the goal here is to recapture the 77.6350 level, cycle day one low. That would satisfy the 92.92% statistic, positive a 3-day cycle. If I haven't mentioned it already, again, Pitbull Traders Funding is running a fantastic special, 40% off all evaluations. That's huge. I think those prices have actually undercut many of the other competitive type of funders out there. But 40% off all evaluations now through August 31st. So if you haven't taken an evaluation, again, this would be a great time to test one out, test a few out. Yeah. All right. Nothing further to do at the moment. We're still in, again, just the long lean bias at this stage, right? And again, what I was referring to earlier was we had a P-shaped profile, okay, which is an profile that's not really in balance. And so what we want to do is project that up as if it was balanced, a delta shaped profile, and that would lead us to around near to the prior opening, yesterday's opening, right? So that's where we're getting. So we get this push out in volume here. Okay, on the profile, we get this push up in volume. So buyers are in control. And again, my senses, my spidey senses, we're going to continue to push higher. So staying long or trying to get long on the dips, all right, is the way to go. All right. I'm going to be flipping over to October, probably tomorrow or Friday. Well, the oil algo that I have stored is it's just an opening range algorithm. Okay, so it's going to do its thing based upon opening range, regardless of whatever's happening with the oil Iran stuff. There you go. Thank you, Renee. So again, if you guys are interested in taking a Pitbull Traders promo this month, all right, there's the link. Be sure to take it. Even if you're self-funded, there's a lot of advantages to taking an evaluation. If maybe you want to work out some issues that you may have with your own trading, it's a great, relatively safe environment to test out, new ideas that you may be working on, and you want to transition into real money and out of sim. That's a great way to do it. That- All right, I found that to be a fantastic way. Put a little bit of money up with the potential for passing it and doing well. And it also provides feedback, right, to the Pitbull crew that you value what we're doing in this particular environment here, this Pitbull Traders Room. So the more you can show your appreciation, that would be a way. We offer a lot of valuable guidance and insight. So please consider doing that. Got to keep the lights on. How many of you have actually, for those that are in the pit room, how many of you have actually taken a trial or on a current trial? It's very easy. It's a very fairly easy process, right? Well, okay. If you haven't yet, really do consider it, right? Again, it's a small price. And again, it shows the folks, Danny Riley and the folks, all the other guys in the pit rule, we call it the pit crew, right? That you value what we do. All right. Again, we're coming up to our cycle day one low, 63.50. All right. Is there a big learning process? What with the funding? No, not at all. It's very easy process. Follow the rules, get paid. Is there a discount code? Yeah. Check the pricing. Check the link up there, Jumbo. It's I think it's PALM 40. But check the link there that Renee posted. All right, we're gonna get our cycle day one recovery, 63.50. Come on. What did I say? Don't ever rule it out, right? $62.75. Yeah, this is what I wrote this morning. Thank you, Renee. There it is. Palm 40. Today's cycle day three with price currently below the 63.50. Bulls will have an uphill battle to reclaim, but I never rule them out in their quest for a positive 3-day cycle, which currently stands at 92.92 historical. Here we go, 63s, 63 quarter, 63.50. Boom. There you go. 64.75. So we got a little room, we got a little buffer. There you go. Thank you very much. Thank you. Thank you very much. All right. Yeah. Thank you. Thank you very much. Yeah, Elvis. It's all voodoo, everyone. The 3-day cycle is all voodoo. All right. All right. Well, that was our primary goal, was to reclaim the cycle day one low. Go right over here to the ES on the far right. There we go. There's your reclaim of the cycle day one low, 63.50. Oh, what's with the NQ? The NQ is just dogging it. NQ not really participating. It's pretty strange, but nonetheless, we got the good outcome, solid outcome for the 3-day cycle. All right, let me go back. So we're still holding on to the A4 here. Again, this is what I was talking about in terms of sometimes we'll take some short stop outs, but you want to catch that runner, and that pays for quite a number of stop outs. All right, now you're free to move about the cabin since the objective of reclaiming the cycle day one low has been fulfilled. So let me just, yeah. All right, so now we just got stopped out. Everybody see the stop trail on the A4. So that's the A4. So this is what we refer to as a flip out. Okay, the A4 flipped, and then it automatically stops you out. So there's the runner. I'm always going to give up a portion of the move. Again, that's acceptable. Somebody else may say, "Man, I gave up 10 points, 12 points, 10 points." All right. Oh, I gave up 10 points, $500. But look what you gained, right? Now, how do we know that move would not have continued even further, right? So again, when you're working a runner, right? So the idea here is we enter here, right, on the lower 10%, right? We exit here, we give up that rather 10%. So the low to the entry, and then from the high to the flip out exit. So it's basically going to be, roughly 10%, right? So what's the difference, right? 80%, right? So what we're trying to do with that runner is we're trying to get 80% of whatever move it wants to give us. Now we've already take profit down here. This is where the cluster of activity occurs for profits, right? For take profit areas, right? That's where generally the cluster of activity occurs in this. So that's why we'll get more of those, and then an occasional stop. But then when we get a runner like this, okay, this runner helps pay for those stops. That's kind of the logic. But majority of the time, we're going to get a lot more of the 1, 2, and 3 take profit areas because the markets just don't run like this all the time. But you want to be potentially in that position when it does run. How many of you, trade, you exit, and then you don't have a position, and then the market runs? So in this case, what we're trying to do is we're willing to give up that runner. Remember, that runner should never cost us, break even at worst, because the goal of that last contract is to get this type of a runner. And that's where you can make a lot of ground up. And that's just the way I have it set the algo. If if you're trading your own, try to work out a plan where however way you're trading, you're able to do something similar. take consistent profit at high value areas, and then have some sort of mechanism in place to manage the runner if the market tends to run, if market, starts to run. All right. TTT is awesome. 3-day cycle is awesome. All right. So what would be the structural location here if we get a little bit of a deeper pullback now? Again, looking forward now, learn from the past, right? Move it forward. So if we get a pullback here, we get a little bit of a deeper pullback here. Again, I'm going to be looking for this area here, right? The 45s, 50-ish area, right? So for potential support, right? Or a buy response area. May not do that, but if it does. And also, the top part of that area as well. So the top part of this area right here, if you carry forward, that's kind of where the market is kind of showing some support there at the moment. So these become our new reference points. And nothing else matters now prior to that. All the things that we planned for and we executed on are played out. Now we look forward to the next situation. All right. that may be it for us this morning, folks. Again, that was kind of the trade we were looking for, planned for, outlined, and we're getting towards the 11:30 time period where I'm going to be cutting out. Today, Danny with an I comes on at noontime. So again, be sure to stick around for her segment. I think she's going to do the Vulcan Mind meld today to get you all in the proper state of mind for trading. The Vulcan Mind meld. We're going to call it the Vulcan Mind meld. Yeah, VM2. Well, Mijit, I appreciate the comment that it's a great call, but be honest with you, uh, you know, I don't. I just outline what the market's potential is, you know, and uh, for me, anyways, it's not really a quote unquote call because I don't feel as though that I actually call the market in any way. What I try to do, my goal is how I read the market. I think my read is pretty solid, right? If I say so myself. No, but I think the read is solid. You know, and if you think about it, you know, it's not super difficult. I mean, it really is identifying. It's just kind of just a short stage. You know, what happened yesterday? What levels can I identify? Okay, what was the rhythm yesterday? I can assure you today, people came in today coming off of yesterday, and you know they're looking for continued spillover, but they don't understand the dynamics. People that are constantly losing, they really don't understand dynamics, right? Yes, that was yesterday. The market, moved lower yesterday. Yes, okay, and we got all that. But what's on deck for today, right? We had some options, you know, expiration play. We had a positive gamma environment, right? Again, understanding the options area I think, is a fundamental. Like to analyze a company, right? You need to understand their quote unquote fundamentals, right? The balance sheet, the income statements, all that. Well, in trading, we need to understand the fundamentals of price action. Part of that is the inclusion of options trading. Now, it doesn't, even if you don't do any options trading yourself, understanding the structure of how the options are unfolding, that gamma exposure idea, right? So we had positive gamma exposure coming into today. And again, I wrote about that in the beginning of the day, all right, from that post, and then from the gamma guys. So we had positive. So what's the backdrop? What's the environment that we are currently, in, right? So we have a positive environment, gamma environment. We're coming off which I think was probably one of the primary drivers here. To be honest with you, right? Is that we had that positive gamma, and that kind of feeds it. It's a feedback loop, so it feeds upon itself. So you got a positive gamma environment. Uh, The price is structurally sound in terms for longs. Price back tested key levels from yesterday and this morning down to those 2025 zone, and then reversed back up. And then we also highlighted the core of what do the bulls need to do in order to expand higher. They need to clear the opening range. The opening range is critical. Once the market cleared the open range, after absorbing all the sellers earlier, that opened the door, the skylight even, for that higher push. So I don't think it's necessarily a call, quote unquote, right? Air quotes. I think it's just reading the structure and understanding what would need to happen on the bullish side, what would need to happen on the bearish side, and what would be the inflection points that would usher in those type of scenarios. And then once we have those, we're just essentially looking for and validating what is happening in real time, and then just saying, okay, boom, now we're gonna jump on board. I don't want to jump on board, lower just because it's lower. That may be a strategy if you're buying an individual stock and you want to dollar cost average into a stock for a long-term investment. Buying on weakness would be probably a good approach. When you're trading futures, that is not a good approach. At least in my world, that is not a good approach. Because what are we trading? We're trading momentum. We're not trading value or anything. We're trading momentum. So the way we're going to get paid is identify structure. Structure takes time to develop, but as I mentioned earlier today, when you build a solid foundation of structure, that is able to support then when all the sellers are done and the buyers say, okay, time to move it higher. There are no more real sellers. And the big institutional folks, again, they have the order flow. They have the control of all the orders. They know when there's no longer supply or there's no longer demand. They just know because they control it. We don't know, but we have to make some inferences about where and when that would happen. And the market leaves footprints, clues all the time. It's whether or not, you ever seen a movie or, one of those, what do they call them? Trackers, right? They're hunting down prey or, I don't know what they call trackers, I guess, right? And they're looking at the branches and footprints and, out in the wilderness. Well, we have to kind of do the same thing. We're trackers. We have to watch the footprints of the elephants, right? Even though the elephants' footprints are big, sometimes they're not always easy to identify. And that's kind of what I try to do on a daily basis, not make any calls, just outline what the potentialities are for the upside and for the downside. But we definitely have lots of clues. It's whether or not you know how to read the clues and then make an assessment of what you are observing, and then simply what we refer to as staying in alignment with the dominant force. Did I know that it was going to the cycle day one low today? No, but that's a potential and it's a reclaim. And so the market knows these levels. See, that's the key. The market generally, like, air quotes, collectively, the big institutions, they know these levels. The 3-day cycle is a technique that identify these levels with 93% accuracy over 15 years. So if that's not a statistic that you can bite into, I don't know what other statistic you can, right? And again, yesterday we discussed about buying call options deep on cycle day 2 yesterday for the move to do what? To reclaim cycle day 1 today. Favorite play, absolute favorite play. The alternative there is, okay, we're on a cycle day 3, we're still below the cycle day 1 low, but the odds are 93% historically to get there. Yeah, it's easier said than done, Philly D. I get it. There's no question. It's definitely right. It's so much easier said than done. But again, you persevere. You know, you seek out guidance and help. You seek out a mentor. You seek out an educator. You seek out a coach. You want to make if you want to make faster progress than what you believe you should be, but you're not. You got to seek out assistance. You know, well, all of us here in the pit crew, that myself included, Manny, Bo, Danny, and anybody else, right? So we're here to help you guys, all right. Achieve your goals or get you on the right path to achieve your goals. Right? We can't guarantee you any achievement of those goals, right? Because it's hard work for everybody. But we're there to help you. All right. And again, what you get from us in the pit room on Wednesdays for me and Mondays for Manny and Bo, etc., is just really a sliver of a lot of the stuff that's necessary. I mean, I could show you what we do and how we do things, but at the end of the day, I could give you the keys. I always say I could give you the keys to the kingdom, and in many cases, I do. But guess what? You have to turn the key. And that's where the deeper part of the education comes in and the mentoring and guidance and so forth, right? So seek out guidance. We're here to help. Again, we're going to be, offering consultation, services and things like that, so we get a better idea of what you guys are individually looking for, trying to do, where you're having issues. And again, as you already know, perhaps, right? But well, I'll just state it. But we are so different from all these other funders, and what our mission is. All right. Yes, having you folks buy evals is certainly a critical part of that, right? To keep the lights on, and that's where you guys can help us. But at the same time, you know, um, versus those other funders that are out there, they don't really offer any educational access and mentoring access. Only a few perhaps do, but the majority of them don't. What do they just want to do? Just want to take your money, right? They want to take your money. They want to, take your initial subscription. You fail the eval. They want you to reset. They want you to reset multiple times. They don't care about your education or, yeah, they say they do, but they don't offer any services to help you, right? Danny Riley designed the Pitbull Traders with one thing in mind, to actually truly help traders, you know, trader development, and using the PTG, not the PTG, the Pitbull Traders, rather. I'm sorry, Pitbull Traders um, funding program as a segue, as a pathway to help if you're having, even if you're self-funded. Like I said, there's a lot of advantages, to utilizing, a program like that. So think about all that stuff. All right. Again, everybody here in the entire crew is open to having conversations. We're not forcing anybody. We would never do that, but we're here. You have access. Reach out to us, and everybody would be happy to have a conversation with you and find out. If you are looking for, solid, core education and a mentor coaching, again, we have those services, and you choose who may be best fit for yourself. So just kind of throwing that out there. All right, that's going to be it for me, everybody, today. I think we had a core good session. Very happy with how it all outline played out. Yeah, we had a few losses in trades, but we also had some nice, runners, and that's what trading is all about, right? But the core of it, what I try to do is keep everybody focused on the correct side of the market activity, where to be looking for opportunities, and then ultimately it's your choice to um, take those trades. So, all right, thanks again, everyone. Will still be around all week. Remember, I'm around all week, working with our PTG community. And again, I am monitoring the pit room every day as well. So if you do decide that you want to reach out or private message, you know how to do that. So stick around for Danny. She'll be coming on in a moment, or a few minutes, or 20 minutes. And have a good rest of your session, everyone. Thank you very much.